Yeah, there are probably two things to look out for. One is what I mentioned in this article, which is the SEC has cleared the way for a large number of crypto ETFs to launch. Right now, we just have Bitcoin and ETH. I
Hmm.
suspect in a few months, we'll have ETFs on a dozen assets. In 6 months, we may have ETFs on 25 assets. So I think over the next 10 years, you're going to have multiple trillions of dollars of capital that needs to allocate to crypto. The ETFs have done a little bit. They've done exceptionally well, the fastest growing ETFs of all time, but they're still maybe just a few toes in the waterfall from where we're going to go.
Bitcoin isn't just trading near $113,000. It's standing at the crossroads of a financial revolution where nonstop markets and trillion-dollar inflows are reshaping the future of money. Bitcoin continues to showcase resilience as it hovers near $113,137, rebounding from an overnight dip to $112,500. According to Matt Hougan, Chief Investment Officer at Bitwise Asset Management, crypto offers a preview of the financial future, markets operating 24/7, 365 days a year, where investors and algorithms must be prepared to respond instantly. Yet, Hougan cautions that this constant access does not eliminate human nature. Weekend volatility, often amplified by illiquidity and cascading liquidations, resembles after-hours trading in equities and should be viewed skeptically as fundamentals remain intact. One of the most significant forces shaping Bitcoin's next chapter is the rise of crypto ETFs. Hougan highlights that while Bitcoin and Ethereum ETFs are already live, regulators are paving the way for broader offerings. Coupled with approvals from major institutions like Wells Fargo and Morgan Stanley, this signals a powerful second wave of adoption. With global institutions managing $100 trillion in assets, even modest allocations could inject trillions into Bitcoin and the wider crypto market. At the same time, treasury companies are emerging as a dominant driver of adoption in 2025. By holding crypto as core reserves, they create step function buying pressure, complementing the steady inflows from ETFs. Together, these forces underscore Bitcoin's strengthening role as both a store of value and a cornerstone of the evolving global financial system. The next wave is already building. Turn on notifications and stay ahead of every move that could reshape your portfolio.
Crypto is sort of your window into the future. It is showing you what 24/7, 365 trading means. It means you can react instantaneously to events. But one thing that I think people need to realize is it doesn't repeal human nature. You see a lot of these big, exaggerated moves, Paul, on the weekend when the markets are less liquid than they are during the week.
Right.
And that should be familiar maybe to traditional equity investors who are used to seeing exaggerated moves in after hours trading. As an investor, you should look at those moves skeptically. They don't necessarily reflect changing fundamentals in the space. For example, there's nothing that changed fundamentally about crypto this week. The government's still printing debt. The existing financial infrastructure is still extraordinarily slow and inefficient. What happened was the market entered its illiquid period on Sunday night, and there were some cascading liquidations. It's
Yeah.
just a feature of this market. You have to be ready for it. Yeah, that's right. I mean, you have to change your ecosystem. You need
Yeah.
traders who are available to react 24/7. You need algorithms that are able to react 24/7. You have to understand liquidity and illiquidity periods. But there's no turning this back, right? The long term future is 24/7, 365 global trading across all assets. That's what the world wants. That's what the world will get. Crypto is just giving you a glimpse into what that future means, the good parts and the
Right.
bad parts, the release valve, and maybe the Sunday night illiquidity. And it's good to train up on that while crypto is still young. Yeah, there are probably two things to look out for. One is what I mentioned in this article, which is the SEC has cleared the way for a large number of crypto ETFs to launch. Right now, we just have Bitcoin and ETH. I
Hmm.
suspect in a few months, we'll have ETFs on a dozen assets. In 6 months, we may have ETFs on 25 assets. So you're
Yeah.
going to have this ETF exposure to a large number of assets. The other thing that's happening behind the scenes, maybe fewer headlines, is that national accounts are finally approving spot Bitcoin ETFs. So folks like Wells Fargo,
Right.
Morgan Stanley, Merrill Lynch. So you have this second wave of growth that I think we're going to see in those major assets, just when the minor assets hit that first wave of growth. Both means more investment capital coming into the crypto market. The World Bank says that institutional and professional investors control $100 trillion in assets. If you think that they're going to end up 5% allocated to crypto, that's $5 trillion that needs to come into the market. That's actually bigger than the entire market cap of crypto. The market cap of crypto right now is just a shade under $4 trillion. So I think over the next 10 years, you're going to have multiple trillions of dollars of capital that needs to allocate to crypto. The ETFs have done a little bit. They've done exceptionally well, the fastest growing ETFs of all time, but there's still maybe just a few toes in the water, Paul, from where we're going to go. It's a great question. I wrote another piece called Solana season. I think Q4 is setting up to be an exceptional period for Solana. You have the combination of three ingredients coming together. One, you have the expectation of a large number of Solana ETF launching. That means flows into those ETFs. There's the article. At the same time, you have these digital asset treasury companies run by some of the biggest names in finance, right? Kyle Samani of Multicoin, Dan Moorhead of Pantera. These are OGs of crypto launching Solana-specific strategies. That's more buying of Solana. And then at the third point, you just have this explosion of interest in stablecoins and tokenization. Some of that's benefited ETH. The other major beneficiary is Solana. You put all those three things together, it's one of the best setups for a crypto asset that I've seen in the last 5+ years. I think it could be, if they all come together, an extraordinary Q4 for Solana. Yeah, I think of it sort of like the tortoise and the hare, Paul. The DAT companies are like the tortoises. They jump into the market, raise debt, and buy $100 million slugs, $200 million slugs, $500 million slugs. The ETFs are more like the hare, incrementally each day buying 10, 20, 30, 40. Which matters more? It depends on your time frame. Ultimately, the ETFs are going to be the bigger avenue. But these digital asset treasury companies can do step function purchases that really dictate the market. I think keeping that tortoise and hare analogy in mind will help people think about these two approaches. That they're worried enough about stablecoins, which, remember, 2 years ago, you couldn't get anyone in a suit to take a stablecoin seriously. And now the Bank of England is worried enough that they're thinking of putting fundamental restrictions on the economic freedom of their citizens to access these things, because it may, pull money out of the banking sector that's taking advantage of them. It's an incredible sign of weakness. Ultimately, it won't stand. Walls can keep in water for a while, but it will find ways to spill out. I think it just shows you how powerful this stablecoin narrative is, that it has the Bank of England quaking in its boots. I mean, that is a big step from where we were a few years ago.
As central banks flood the world with trillions in newly created money, Bitcoin is emerging as the ultimate escape hatch from fiat debasement. Bitcoin's role in global finance is strengthening as investors look for protection from the vulnerabilities of fiat currencies. Matt Hougan, Chief Investment Officer at Bitwise Asset Management, argues that traditional systems have long trapped individuals in local currencies. Bitcoin broke this barrier by offering money independent of governments, while stablecoins extended that freedom by granting access to alternatives like the US dollar. Their impact is now undeniable, with defensive moves from institutions such as the Bank of England underscoring the growing importance of digital assets. Hougan also highlights the Bitwise 10 crypto index as a core building block for investors, functioning like the S&P 500 of crypto with diversified, market cap-weighted exposure. While it provides a stable foundation, he notes the value of adding tactical allocations to assets such as Solana or Avalanche when opportunities emerge. More critically, Hougan views Bitcoin's monetary properties, storing wealth without space and transferring at light speed, as positioning it to surpass gold as the premier store of value. With central banks expanding balance sheets by more than $25 trillion since 2008 and U.S. money supply up 40% between 2020 and 2022, concerns about debasement are accelerating. Hougan believes this macro perfect storm is fueling demand for Bitcoin, establishing it as a cornerstone of the future financial system. Let's get back to the video.
We've been trapping people in their own geography and forcing them to have no choice in their currency. Bitcoin started to break that. You didn't need to be government-based. You could hold something that's independent of that. Stable coins are another way. You don't need to be local currency. You could be in the dollar, which is the cleanest dirty shirt in the fiat currency world. From my perspective, more choice is better for investors. It's empowering for individuals. And these sort of last gasp efforts from people like the Bank of England shows you that the time is now, that they're really ascendant, that they're globally important. And, you know, the funny thing about looking at this chart, this list of assets in our index, the Bitwise 10, is depending on what day you ask me, I might be more excited about one asset or the other. The way I think about this portfolio for most investors is that this is your core. This is a market cap weighted portfolio. It owns assets in direct proportion to their size in the market. And that's your core. And then most people will want a satellite that lets them overweight. You may look at what Scaramucci is doing with the Avalanche Digital Asset Treasury Company and say, that's going to be hot. I want to overweight Avalanche. You may look at what's happening in Solana. Hougan says it's Solana season. I want to overweight Solana. We love that. But I think that index, which is like the S&P 500, can be your core, and then people can over and underweight from there. It's what I do with my own personal portfolio. I think a lot of people will as well. You know, it goes back almost to what we were talking about earlier. It's a matter of time frame. I was speaking from a history of money perspective. I read a great book, The Secret History of Gold. It talked about why gold was money more so than silver. One of the primary reasons was it was more dense and easier to move. You could store a lot more wealth in a small amount of gold than you could in silver. Put $1 billion in silver, it might sink your ship. The reason Bitcoin over gold is you can store an infinite amount of wealth in no space. With Bitcoin, you can move it around at the speed of light. That's why I think Bitcoin is ultimately ascended, ultimately will be a bigger asset than even gold, which will remain bigger than silver because it's better on those core monetary statistics or characteristics. From a short-term perspective, I don't know, silver is more exposed to economic trends than gold and Bitcoin. I'm more worried about economic growth than I am about rising interest in fiat hedges. Therefore, I lean more towards gold and specifically towards Bitcoin. But look, I think all of those hard assets, I think the tide is rising on all of them. I think investors are fed up with what's going on in fiat currency. You see a bid for gold, silver, Bitcoin, other metals. I think that is a rising tide across the board. Look, all of those charts are screaming that investors want exposure to these hard assets and they want them 24/7, 365. I think we're going to tokenize everything. So who's going to do it? I don't know. Maybe it's Paxos, great company. I think they'll be successful in that market. The thing for investors to look at it, 30,000 foot view, is each of those assets is up and to the right. They're telling you something and they're telling it loudly. The thing that unites those stories, the best looking charts in finance are all hard assets. They're all doing that. What they're telling you is there's rising concern about fiat debasement. That I think is going to accelerate. And, pick your horse, Paul, but they're maybe all going to win at this derby. You know, I do ultimately, that's been the direction of that business since its founding, right? It's sort of been occupying that world. It understands that ownership is important. It understands that decentralization is important. I know a lot of people look at something like that. It's like Roblox, a gaming company at the top of a Web3. Remember that if you look at internet investments, one of the best performing internet investments of all time, far better than, say, Google over the last 20 years, has been Netflix, right? There are different ways to monetize these new capabilities. There were different ways to monetize the internet. There are different ways to monetize Web3. Gaming is one of them. Companies doing extraordinarily well. And we're clearing the regulatory roadblocks. It depends on the pathway toward that. These things always take longer. The old quip about people overestimate what can change in 1 year and underestimate what can change in 10 years. I think that applies here. But the market recognizes it before the fundamentals arrive. That's the way markets work. And so I think you can look at the performance. If you pull up a chart of that ETF, BWEB versus the NASDAQ 100 Qs over the last couple of years, what you'll see is that the market is recognizing the performance of these extraordinary companies. And when will it show up in the earnings and the new announcements? Again, it'll take time, but it's starting to move in that direction. Bitwise is looking increasingly at what we can do on chain. I will leave it at that. I don't know if I'm going head to head with Mr. Wonderful, but
Bitcoin's growing influence reflects a fundamental shift in global finance. Its volatility, while daunting, is also a source of opportunity, attracting both traders and long-term investors. Structural changes such as 24/7 trading, the rise of ETFs, and the adoption of digital assets by corporations are reinforcing its position in mainstream markets. Meanwhile, unprecedented monetary expansion and concerns over fiat debasement are fueling demand for hard assets, with Bitcoin standing out for its efficiency, portability, and scarcity. Far from being a fringe asset, it is evolving into a cornerstone of the financial system, challenging gold's dominance as the ultimate store of value. Do you believe Bitcoin has what it takes to surpass gold as the world's ultimate store of value? Markets move fast. Drop your thoughts in the comments, share with your network, and subscribe to catch the next big crypto move.